Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 6th of October. And we're hoping that we've seen the worst for the recent retreat for the FTSE. So we've basically bounced off the September support, or just above it, in fact. And that will quickly next week get back above the 50-day moving average, currently around 75.20. Above that, we've got the 200-day line at 76.40 to aim for, and obviously the top of that falling trend channel from back in February. On the downside, if we do break below 7400, then there is the risk of a rollover down to the floor of the channel 7180, but at the moment hoping that August line is the line that works. Moving along to the DAX, and here it has been a story of a dance with that rather obscure May support line projection, which was slightly overshot during the week, but managed to find it around 15,100, and above that looking for the recent resistance 15,500 as an initial target, but early really back above that 50-day line 15,700 or 650 really, really snapping the decline that we've had since back in August. Onto the Dow, and here it's been day after day of losses until I suppose the last couple of days, and here trying to find support really near the old May support area 32,600 and 32,800, the two levels there, and so far we've bounced above that, which is nice. RSI at 28, so in the oversold category, and it's probably the most oversold we've had for quite a while. Actually, I have to go quite a long way back to find an oversold RSI as we have now. Maybe back in 2020 was the last time which was actually like this, so it's interesting that we are that weak, but above 32,600, looking for the 200-day line again, 33,800 for the first half of this month. On to Bitcoin, which has given a rather brighter picture of late than it had most of the summer, but still stuck between the 50 and 200-day lines. 200-day line there at 28,000. We want to see at least an end of day or even an end of week close above that to give us a 30,000 target sometime later this month, but ideally we stay above the 50-day line and that uptrend line from back in January at 26,500. In the meantime, at least above that line, we feel as though the recovery from the beginning of the year could still take place, or resume in fact. Starting off with Audioboom, which has been probably one of the most miserable performers over the past year. It's incessant breakdown for the shares. In fact, even though there have been quite a few potential rally signals and even potential rallies that we had back in February, etc., the trend here has been persistently to the downside. It's just maybe a little pause in the downtrend in the sense that we've got lower lows for October, but a higher RSI trace, a bit of bullish divergence there. That could be enough to take the shares up to a resistance line there from July around £1.60. But I wouldn't get too excited unless we get an end-of-day close through that level, which might then take us up towards August resistance in the £2 area. But I think anything over 160 at the moment seems to be rather optimistic. On to Bluejay, which has been a difficult customer over the recent past. We had the gaps down back in for August and for September. What's interesting here, though, is that the consolidation that we've seen has been above the floor of the gap, the initial floor of the gap there at 0.78. That means that we are looking for the shares to get back to the 1 penny area, which is the area of the 50-day moving average and early September resistance. But the key here, holding above 0.78 on an end-of-day close basis. On to Corero, which has delivered one of our favourite setups, the unfilled gap to the upside, and then pushing on further there. So 7.5 pence, the top of that gap, and old resistance, neckline resistance, looking for 11 pence or 11.5 pence by the end of next month at the top of that wide rising trend channel. Next contender is Gulf Keystone, and here the shares almost exactly hit the top of that broadening triangle from June at the beginning of the month, so 132, 133, that sort of thing. And they came back, but have retested, or at least bounced above the 50-day moving average. That's currently around the 103 mark. And that higher low gives us some hope that we should be able to head back and retest the best levels of this month in the low 130s by the end of October. Ideally, the more price action we have above that old September peak at 114, the better for this situation, rather one around the 114 level, as I said. Moving on to another situation which is quite challenging at the moment. Here we've got Helium 1, and here the overall pattern is of a broadening triangle, which has been in place since this time last year. We did warn when the shares were around 5p that they could have a dip towards the floor of that broadening triangle. That was around 4.25 pence. As a worst case scenario, obviously there was a slight overshoot on news down to 3.95, but according to that pattern we should have seen the worst around the 4 pence area. If you're cautious though, maybe you wait for a break of the 5 pence level, because that has been the resistance zone over the course of this week, so that might be a momentum trigger for some. RSI at 19, so very oversold, so that also backs up the idea that the lows here, or the shares staying below 4p, would only be a temporary thing if that happened. On to Insig AI, which is gradually improving by day. Here we've got rising 50 and 200 day lines. We had a golden cross to start last month, and just looking for the shares to get through 27 pence and that resistance line there from this time last year to give us a potential move to 34 pence maybe by the end of next month. Ideally we stay above 23, 24 pence in the meantime. The next stock is Invinity, which is also looking quite encouraging. A nice push through the, after a bear trap from below the 50 and 50-day moving average, looking for the shares to hit up to the low 60s at the top of a rising trend channel from back in December. Ideally, we stay above that 50-day line at 42.5 pence in the meantime. Another stock which has had a bit of a vertical move of late has been IMC Exploration, and here we've got a V-shaped bull flag, which looks as though it is a mid-move consolidation that will break 0.65 and head up to 0.9 maybe as soon as the end of next month. It's a punchy call, but as we've had that step progression, so vertical move, sideways, vertical move, that does give us some hope that the shares will be able to deliver such a big upside, especially while they're above the 0.55 area. Next stock is one that we looked at quite a lot of late, RBG Holdings, and hoping that this stock is finally broken out from its consolidation. Today looks like a decent candle so far, and that July resistance line and the 50-day moving average around 22.5 pence, 50-day lines rising, and while we stay above the floor of that channel there at 21, looking for up to 36 pence by the end of next month. UPL has been slightly frustrating in the recent past, but it's been sort of shifting along in a sideways fashion, so between about 1.8 and 2.5 pence. Nice bounces off the 50-day moving average, sharply rising now, and above 1.9 pence we are looking for up to 2.9 pence by the end of next month, or hopefully even by the end of this month now, given how long we've been consolidating over the last couple of months. Valirx is a pleasant charting experience at the moment, on the basis that we found the break of the falling wedge around the 6.5 pence level. Nice mid-move consolidation, then we've broken through the recent high around 11.75 pence. Above that, looking for, as you can see from the red line, up to 17 pence by the end of this month. So quite a turnaround there for Valirx. On to the last couple. First one is Zoo Digital, and here an interesting example of what looks to be an overshoot, or what was an overshoot to the downside. Bottom of the gap there around 42.5 pence, and above that we've been looking for the shares to fill the gap up to 52 pence, and they're already doing it. So hopefully we'll get to even up to the 50-day moving average level by the end of next month, on the basis that this is, or was, an overshoot with that very strong candle there off the lows. Zanaga is the final stock today, and here you can see that we're in a mid-move consolidation, hopefully looking for the shares to at least fill that gap up to 12.25 pence, while they remain above the 8.75 level. The 50 and 200 day lines both rising, and the rally started with a double on a fill gap to the upside, so that looks very healthy as we go into a golden cross. That's it from me today. More updates tomorrow.